Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 160 for May 25th, 2021. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today we will be discussing your trade ideas. And today I've invited Michael Filighera to join us, and you should be seeing his screen right now. Also, the option professor is back to moderate, and I'm going to go ahead and turn it over to him.
Okay, great. Thanks, David. And welcome, everybody. We had a very big day today, a little bit of a reversal, but we'll have to see what tomorrow brings. Right now, Michael Filighera is going to give a little background on himself and what's going on with traders helping traders.
Thanks,
Michael?
Jim, and good afternoon, everybody. Again, I am Michael Filighera. I am with logicalsignals.com and also tradershelpwithtraders.com. My background is that I've been trading in the financial markets since 1979. And I've traded here in the United States, here in San Francisco. I've traded in London. I've traded in Amsterdam, Germany, coming back to San Francisco. About 8-9 years ago, I switched from being an options trader primarily to learning the skill of day trading. And that's what my focus is right now. And at Traders Helping Traders, I continue to produce and provide two video casts each day, one on the NASDAQ and one on the S&P 500 on those futures markets. And currently in putting together all of the work necessary to start restarting a trade room, and that'll be happening in June.
Okay, perfect. And everyone will get a chance to get a hold of Michael after the broadcast, but we've got a lot of stocks to go through today. So let's get at it. The first one is going to be on Uber.
Okay.
And see what you think of Uber. Seems to have made a little bit of a turn.
Hey, Jim, you guys want to do a quick market overview first?
Oh, okay. Michael, why don't you give your thoughts on what's going on with the S&P and things like that?
Okay. That's the screen I have up. That is the S&P 500, the future. And if you have any knowledge of Elliott Wave and Fibonacci, you're going to see exactly what I'm doing. The high that we saw previously in the S&P at around 4238.25, that was the ending point for an intermediate third wave. What follows will be an intermediate level fourth wave. And that's the correction of that third wave. Third wave was huge. It was long. And so that fourth wave is going to take the shape of an A, a B, a C. That's the wave structure. So wave A is down, wave B is up. And it looks like it finished that wave yesterday, or actually overnight. Yeah. Overnight during the Globex session, they ran up to a high at 4212.75 and then started to sell off. That is so fitting to what I'm now looking for, because I'm now looking for the S&P to travel all the way back down and put in a new low below 4,029, which we saw a couple weeks ago, and because that was the end of wave A. Now, also what is very interesting to note right now is that the relationships between these corrective waves is the C wave, which is what I'm looking for to come down. And it's related to, and you can put relationships together on a Fibonacci basis to the A wave. And so if I start to do that, the first most common relationship is that wave C will be equal in length to wave A. That's going to come in right here at 4,003. So we're basically, if everything goes according to plan and it gets down there, that technically would complete the pattern and set the stage for an intermediate fifth wave rally, which will then take the S&P back up, new highs, 4,300, 4,400. We'll be able to really put some Fibonacci numbers on that as it progresses, but it should be quite dynamic. And that's going to be the one that everybody wants to pay attention to, because it's an intermediate fifth wave. It will be completing that. And then on top of that, it'll be completing a primary fifth wave. And on top of that, it'll be completing a cycle fifth wave. And that cycle degree fifth wave is a rally phase that started decades ago. So we've got a lot of correction coming up. But first, we will, once we complete this small correction, we will zip back up, we will make new highs, and everything will be jubilant and everything all over again. But right now, I feel that the S&P should continue down. We of course still have the potential for a swing up higher. In fact, I can just redo these Fibonacci's, and I have numbers that are around 42.35 up to about 42.45 that would cover any additional upflow, and that would produce a new high. But I urge people not to get excited like we're breaking to new highs, because this type of corrective wave that's in progress can make new highs. And the best example that I have for that is when the Dow broke to new highs about 14,000 back just prior to, I believe it was the one of the, we had the 2008, 2009 economic debacle. Just prior to that, I think the Dow went up and made a new high and then came flying down. That was what we call an irregular B wave, where it goes up, makes a new high, and then you get that crushing C wave down. And that's what happened. So if it were to do it again, and the S&P were to go up and create a new high, I would still be expecting a pretty severe blow to the market and to everybody's ego, I guess, as it came down. And then the other side of that is that once this thing bottoms, the launch off of that will be stupendous. It'll be one of the best trading opportunities we've had in a very, very long time. So
Yeah.
that's my take on the S&P right now. And so initially I'm going to be looking for, on my hourly chart, a 5-wave pattern down. And right now we're just in the infant part of that. The break below, and we're closing right on it, which doesn't tell me much, but if this were to close below this 50-day moving average, it puts a little bit of strength into the fact that the market will continue to go lower, I guess reaching this absolute first support level at 41.63, but eventually breaking below the 200. And again, this is an hourly chart. So as you move around in time frames on a chart, on a product, that your moving averages are going to come in at different levels. So the 200-day moving average on the hourly chart is at 41.59. And once they start breaking below that, I would anticipate that we're going to get some acceleration to the downside. And that's about it for the S&P right now.
Okay. Yeah, just a quick 2 cents on the S&P. We were talking about the pullback to 41.40, and that if it got above 41.80, you'd get a little bit of a run and maybe an extended run. Well, we got a good run, about 35 points. About 35 points.
You're right.
And
In
now
fact,
it's
that was
pulling,
a great call.
Yeah.
That was a great call that day.
Oh,
yeah.
Definitely. And then, but now it's pulling back to that number, the 41.80 neighborhood.
Yes, it is.
And it's holding. So
Yes,
I would say that if it does not have an ability to get through this 41.80 on the downside, and we're going into the long holiday,
right,
it could be a setup for one more bang to the upside. But you're probably better off, looking for strength and following it than to try to step in front of it right here, simply because, the same momentum we talked about with Bitcoin if it can't get above 50,000, it's never going to 75 or 100,000. And if it can't get through 45 or 50,000, it could have a big drop, which is exactly what happened. So sometimes it's not a bad idea to wait for strength and then follow a crowd, follow momentum, than to just pick a spot on the chart. So I think you're 100% at this 41.80 mark. If this thing breaks 41.80 and we start seeing 41.65 and 41.59, then the momentum is going to be picking up for a reason. But because we're right in front of a holiday, because we're right at the end of the month, I'm still a little bit cautious to get too bearish until we see some prices underneath this 41.80.
Right. No, I agree. And I don't think it's Elliott wave is not necessarily, the use of Elliott wave is not necessarily a bullish or a bearish call, because Elliott wave does not really take any fundamentals into consideration. It doesn't preclude or pretend to forecast an impending war or some economic collapse or anything like that.
Yeah.
It goes by the way that the wave pattern itself is pulling out, and then just having the knowledge of what is involved in a corrective phase. Because these moves here, Jim, were extremely strong.
Oh, yeah.
And particularly this one last week. I mean, the buyers just started right from the opening and they did not stop until the end of the day.
Right.
So, and we still get those. We just had one yesterday. It
Yeah.
was a difficult trading day, but they basically bought it all day. So,
Yep.
you know,
And sometimes when these things are opening up strong, they don't hold their gains very well. But you can see the 50-day moving average is coinciding right around the same neighborhood of this 4180. So that's why this is a very critical time. If we break this level, I think the dogs get let out. And if we hold this level and we're going into a long holiday, it wouldn't surprise me if they tried to go after the highs.
I absolutely agree.
Yeah.
I do. And you can see that we came down to 4179.25,
There you
dipped
go.
just below it, but you see how quickly they bought it back up.
Right.
They're not
So
gonna let it
tomorrow's a
close
today was a big day to show us that this thing could start rolling over. And
Yeah.
tomorrow's a big day to show us that there is a floor underneath it in the 4180 area.
Right.
So that's why this week is kind of exciting, because there's a lot of factors coming in, technical factors and the end of month and the long weekend. And I think I don't know what the seasonals are on this kind of thing, but I would imagine a lot of times before Memorial Day, there is a rally.
There can be.
Yeah.
But I think that, and sometimes that it could be held off until June, the beginning of June, because if we end on a down note, then that might just postpone any strength coming in.
Well, I think that would be also very key because, you know, again, the idea that these interest rates peaked in March, and the fact that some people say there's data that between 2 and 4 months after that happens, the market does top out. Well, if we make a high here in May, and in June we don't make a new high, now you have a technical formation of a monthly high surrounded by lower highs. And then, of course, that is something to short against.
Right.
You know, then you have a point to defend. Right now, you know, you're selling into ad infinitum because it's making all-time highs every month, right?
Pretty much, isn't it?
Yeah. So, I mean, if it stops making new highs, that's a heck of a good fence to work with if you wanted to do selling, because at least somebody has established that it hasn't been able to make a new monthly high if we go through June and don't take out this monthly high.
I agree. And just to add, there, you know, each of the waves in Elliott Wave, when you really study it, they each have their own personality. And this whole structure here, being a B wave personalities are more, they're deceptive. They run in a direction. They give you this, we're going back up, or conversely, if it happens to be in a down position, we're heading lower, we're going to crash, and they stop on a dime and turn. And because that's just the way they are. They're just very, very deceptive in how they do it. But what I try to say is that this rally is a response to that decline. This rally was a response to this decline. So when we're now going to go back down, it's declining in response to this and then a continuation of that. So
yep. And the decline also could be a factor if there's not that much news hitting the tape in the next few weeks either.
True.
Because we don't have any earnings announcements until the middle of June and whatever. And so, you know, if you're news light and it looks like volume is drying up and there's nothing to feed on a new high, you know, that can be a problem too. So it's going to be very exciting because, again, it's a real tug of war up here. Are we going to go make new highs, or are we going to do a give up phase? And you know, it's still technically, you know, above some support. And so we'll see what happens. But
nicely, in fact, just to cap it, and then we'll move on to Uber.
Yeah,
the S&P has not been below 4,000 in quite some time.
Yeah,
and so this thing would portend to finish just above 4,000.
Oh, you mean the pullback you're talking about would hold the 4,000 mark?
Yeah. So that's going to keep that bullishness right there under the market.
Yeah.
So.
All right. Well, let's hit some of these stocks. We got Uber, which seems to has made a little bit of a turn to the upside on the shorter term charts.
Yes.
Are you seeing that it is an improving situation here?
No, actually, I don't. This is the hourly. I'm going to take it up to the daily, which might show us the picture a little bit better. Well, I should say that on a daily basis or a little bit longer term, yes, I think that Uber is turning a little bit of a corner. But first of all, number one, Uber benefits from being grouped together with FANG stocks, Facebook, Amazon, Netflix, and Google. And now Uber is stuck on the tail end of that. So when you've got all the fund managers and the institutional traders who are coming in to buy or sell the FANG stocks, then Uber participates. So whether Uber is doing spectacular or not, they can have these beautiful runs. Now, last time we were talking, we did discuss Uber, I believe, or at one point we did. And this is a very nice, clean ABC correction off of that high at 64. It appears that it might still need one last drop, which is going to bring it below 43. Doesn't have to be by much, below 43. Now, what can kill that or negate it would be if the market goes up and actually goes above 54, 54 and a half.
Yeah, don't you think between here, don't you think between here, basically between here and 55 is a zone of resistance?
Absolutely.
And
you've
so,
got your moving averages in there.
Yeah.
And you've got, we have resistance right here at 50, 60, which it kind of got to and didn't really clear too much today. We'll have resistance at 52. You'll have resistance at 53. So yes, you've got zones. And then on top of it, you've got your moving averages, which are still, they're kind of starting to flatten out, but only takes a good down day and they all then return to their down position. And it's sitting right here at the 200-day moving average on the daily chart, and that's at 48.49. Now, the fact that it's going flat kind of tells me that it's just doing a sideways move right now. If it starts to turn and angle up, then I'm like, get on board.
Your stochastics are a little bit on the high side, aren't they?
They are, but they're a momentum, stochastic momentum. So they'll move a lot faster into overbought simply by just the momentum from the market.
I got you.
So if it was just a pure stochastic, I don't think it would be that high.
You want to throw lift up there just to compare it?
Sure.
LYFT. See if it's the same chart or different. Looks like it's
Exactly
pretty
the same.
similar. Yeah,
Basically the
same.
same.
Yeah.
So, and which does surprise me. I mean, Uber did a little bit better in this B wave part of its correction, but it's all overall has the exact same shape, except this one now. Let's see where that wave one is going to be. It's going to be, I think, well, it got up and then backed back off. So, but the fact that today that it broke above 54.36, we'll see what happens. It could have negated continued downside and put this as the low, and now it's just going to start marching higher. But if we do get the continuation of that larger correction that I am forecasting in the indexes, so in the NASDAQ, which Lyft sits in, then they will not escape it. So I don't have a lot of hope for these two companies, simply because fundamentally Uber is struggling, and so is Lyft to get drivers back on the road for that.
Right.
And until they really start to make some changes to their pay structure or their payout structure, drivers aren't going to come back. They've been burned badly. And I'm hearing this because Uber and Lyft both are headquartered here in San Francisco. So we get a lot in the press about them. And drivers are bad mouthing this whole thing. And Uber's offering drivers do 3 rides in consecutively in one day, and they'll give you a $100 bonus. What if you took 3 rides?
Uber has
somebody.
Uber has that international thing going. And I remember when I was in Italy, the Italians just kind of almost threw them out of the country because there's a very big taxi cab thing there. Right.
So I don't know. I again, depending, and then we've got the state of California breathing down both their necks, saying you've got to go electric. You have to go electric. You got to make all your drivers drive electric. And they're pushing real hard on that one. So I don't know.
Well, let's swing over to Visa, which has absolutely done very little this year. It was around 220 bucks on January 1, and it's 229 today.
I was going to say you haven't gotten very far, have you?
And the consumer supposedly is out there spending his brains out, but apparently he's not running up much on the credit cards. Plus, maybe different forms of payment like PayPal and Square and
Right.
other ways to pay is coming up. Anyway, what do you think here? Looks like it's in a bit of an uptrend still.
In a bit. And
I mean, from the turn, from the bottom there.
oh yeah, from there,
Yeah.
yes, I agree. But from here, again, first leg of the correction, a three-wave correction back up. And I would suspect that we're going to come back down in a move that size. And in fact, I can just throw some Fibonacci right on there. If we're looking at it, and indeed, oops, come on, don't be that way. There you go.
Actually, where it started the year is probably not a bad line in the sand, 220. So if it goes down on the year, ditch it. Otherwise, see if the horse will run for you.
Yeah. But again, what I really am suspecting, I really do have a lot of confidence in the fact that the infrastructure package is going to pass, and that is going to provide good jobs for millions of Americans. And that's very positive, because not only they're going to turn the economy around, but just think about all that tax revenue going back to the government from all these people going back to work. And then they're all going to be using Visa cards, et cetera, et cetera, et cetera. So I think that right now, because we're in this in-between period with all of that, we're going to finish this correction. But then I see that a very dynamic run back up to new highs in indexes. Now, whether these individual components do it, I would think Visa could, but I'd be looking first for it to come, likely back down to here.
Well, that means it goes down. That means it's going to go down on the year,
huh?
Because it started at 220. It started at 220 this year. So if it goes under, and the low recently looks like 220. So if this thing goes under 220, that means Visa will have produced a negative return this year.
Well, what if it goes below that? If it goes below that in the month of June, and then it sails back up.
Yeah, well, I'm trying to say it's not illegal to do that. I'm just saying that if anybody who thinks it's going to go underneath 220, they're looking for Visa to have a red number for the first 6 months of the year, which
I got you. Okay,
you know what I mean?
I do.
So,
I do.
Yeah. If you don't think that's happening, if you don't think that's happening, you got a $9 risk right here.
Agreed. But I think right now, it just needs to actually tell you the truth. If it came down to 219.53, that would be enough, because that would keep it above, just below 220. It just has to touch it and then bounce for all I care. But it just needs to create a new low below 220.31. And that would complete the structure.
And it looks like it penetrated the 50-day for just a short time, and now it's back above it.
Yes, I do show that. Again, this is a daily, so if we go down the hourly, it might present us a little bit different picture. But yeah, I would look for it lower. And again, with enough institutional money and everybody else still in here, they may have that same thought that you just said. We're not going to let this go below 220 because we don't believe that it should end negative.
Right.
So, and they could hold it. So we shall see. Now, again,
if it did take out that point of 220, you'd probably get some heck of a selling, because you have like that 1, 2, 3 formation where, the one move was down to 220, the 2 move doesn't take out 237, and then the 3 move is where everybody wants out.
And that could be, and that'll bring it down to 12, 13.
Oh, no, then you'd be down there very easily, I would imagine.
It could, but you know what? I think down there, then I think it's up to people that are giving analysis on this to say that's a buying opportunity, folks.
Yeah.
So,
but like I say, if there was cause for it to take out that low at 220, you'd have to figure that there's some people who would start saying, "Get me out."
And hopefully it's still profitable for them, because if it's not, then they're going to be, giving back $8 or $9, and maybe needlessly. I don't know.
Yeah. Well, let's look at the arch rival here, PayPal, PYPL, and see what that's looking like. It's probably looking better.
It actually is.
Mhm.
But similar. See, they are going to have these similar patterns where they get the first leg down of a correction, then they do the intervening rally phase cleanly, and then they start down. Now, PayPal, they did. If PayPal continues up, and you see, look at that, they're putting this little cross there. They got a little doji there on for a close today,
Mhm.
slightly positive.
Near
But
the
it
high
could
of the
just
day.
slip and come back down.
Yeah.
And then I think it just maybe can get, well, 223. So maybe just below that 200-day moving average. And it's enough to scare, the correction I think is going to be enough to shake people in the boots, unless they can really come in and get an understanding of what essentially is going on, and then what this then will lead to. Which is why I try to say it's just a smaller correction. It's what it looks like to me. Now, I haven't done a long-term picture for PayPal, but I think PayPal is a damn strong company.
If you were
So,
going to take a hit at here, would you think this 247 to 251 neighborhood would be the kind of area you would definitely not want to get taken out if you took a shot at it on the long side here?
yes,
It's not a bad support zone to defend against, right?
no, I would agree with you on that. But just if you're going to get in here, understand that you might, don't put on a full position, maybe put on a half and then pick up a half if it does go down.
Mhm.
You
Or
know,
or
you-
add it, or add if it starts taking out 260, 270.
Right, right. Because that's essentially, as and a lot of investing advice, that's how you do it. You
Mhm.
don't, many people will say average down, and that could be a mistake. But if it's going in the direction that you want it to, and you're
Yeah.
long, you can always add to your position.
Yeah, because then you got momentum going, and obviously something's
Yep.
occurring to get money flow to come into the market, and so something's
Right.
occurring to make something happen.
Right. But I think PayPal as a company that'll continue, they own Loan Builder now. And Loan Builder did a lot of these PPP loans to companies. And, they did real well with those. And they continue to do well with the Loan Builder to corporates, to small businesses. And, and I think that could carry them. So I think they just participate simply because it's a market-wide correction. But like so many companies, I don't think that it really says a lot about the underlying strength or weakness of a company when it's caught up in a correction like that, a broad market correction. So I actually, even down at 227, I'd be like, that's not bad.
No,
That's not no great shakes to me. But then again, this is a much bigger picture. So like you said, if somebody's getting in now, how much should they risk? And if you're going to risk, between 11 and $7 or something in that range, yeah, depending on how many shares you're getting, that could be a big hit.
yeah, oh yeah. Well, here the next one up is a financial, and financials have been the catch meow as one of the sectors that have made a lot of money for people in the last 6 months. But this one looks
Yeah.
like it might have had a reversal of some type, because it opened up and made a high, and then it closed lower. So today it
Good old
had kind of
Chuck
a,
Schwab.
yeah, it opened at 72.95, went to 73.50, and went home at 71.63, right on the right. Well,
Financials, yes, financials opened strong and then they all got hit.
yeah.
And I'm not sure why, other than bonds were racing.
Yeah, in
You know,
other words, this high yield, this interest rates are going to be so high, and the banks are going to make so much money because they're going to get so much high interest on the loans they'll make, which
Right,
there are no
yes.
loans anyway. But
Yeah.
but the rate game is not playing into their hands right now.
No, but but it's so interesting because the day that the bonds go down, they jump back into all this. The day the
Yeah.
bonds go up a point, they jump out. So,
Yeah.
I don't know. So, but I think this is a very strong chart, but it
Totally.
does seem a little bit toppy to me.
Yeah.
So I would, like with all of the financials, look at that one. Look at that. Wow. This is the weekly. That's steep.
Hmm.
It just is so. Yeah, I don't know. I would not be getting into the financials, not into Schwab right now.
Yeah, on the 1 month graph, this 10-day moving average rolled over today at about 72.50. So if it got above 72.50 or 73, then you could make a case that the train's going back north. But right now, it looks like there's a little hesitation going on. So,
And I would think that the financial stocks are going to be more in alignment with the Dow and the S&P in terms of correcting.
Mhm.
And so I think they start to come off of these very lofty levels. I mean,
Yeah, and you
here
have
we are.
your double high around 73.50 ballpark area.
That's my monthly max chart. Let me bring this back down.
Yeah, I have a 1 month chart I'm looking at.
Yeah.
It looks like kind of a double high around 73.50. And now you're
Yep.
kind of rolling over a little bit. So the momentum has short-term momentum has rolled over.
So actually, it's a triple top. It's 73.25, 73.59, and today was 73.50. So yeah, got a triple up there on a weekly.
Yeah, and if you get above that level, then you get into the higher levels. But right now, that looks like the ceiling.
It does right now, but don't forget, I think that's like these moving averages. This one is really, really short term, so it doesn't have a lot of bearing. But this is a 10-day at 70, the 20s at 64, 68. But this is something that you taught, which I think is very important for people to understand. See how far it is away from the 200.
Oh yeah, believe me, I'm well aware of it. That's why you might want to price out. You might want to price out covered calls up here or something like that.
Yeah. Yeah. So, but I mean, I'm bringing that up because it is a point, and it's an excellent point that you emphasize so often.
It's a ticking time bomb.
Right. And I think that needs to be added. So
yeah,
that's why I'm kind of turning it back, saying these moving averages, they're too, on a weekly chart, they're too far away.
Yeah, June, July, and August, the next 90 days, unless something occurs to make everybody just want to put all their money in the stock market, there's vulnerability to revert back to the mean a bit.
Absolutely.
Absolutely.
And
anyway,
I don't know, I don't have it on this chart, but you would put up like a monthly or weekly or monthly point of control. That's where value starts. So you're going to have to decide, technically, you're going to look at a point of control. And if your point of control is down here on a weekly basis, and this thing starts to come down, that's going to be one area it's going to go for. It's just the way traders trade.
It really all rests in that 4250 area on the S&P ballpark figure. If we're going to blow that out and go to 43, 4400, then these things are going to probably get on their bicycle again. But if it's not going to get taken out, this will be one of the casualties of the correction.
Right. And again, I'm going to throw this pitch out for you because I know this is right in your ballpark, that people need to understand. You may still want to hold on to Schwab up here, but if you're going to hold on to it through a correction, please put something underneath it. Please put a little defense underneath it so that you're equating what you're going to lose in the stock by making it somewhere else. Either through a call, a covered call, or you're buying a put
or a collar. Sell the call and buy the put.
Yeah.
Price them out, see if it makes any sense, and take it from there.
Absolutely. But also, I just want to say, it's like, folks, if you have any questions, go to theoptionprofessor.com.
Yeah, no biggie. All right, let's switch over to the yellow metal gold GLD.
Yeah.
And it bottomed out at 1675 on the spot, ran up here towards 1900, and is having some difficulty getting through 1900. And what are you thinking here?
You're talking to one of the original gold bugs.
That's right.
Last time we were talking about gold, I was looking at the fact that I thought it needed to do one more down, and it failed. And it failed in terms it didn't create that new low.
No.
Same thing happened in GLD, and then it was off to the races.
Right.
Now, nice structure. Unfortunately, still looks corrective to the upside. So wait a minute, I don't like that. So I'm going to say that failed it, and then that's 1, 2, 3, 4, 5. Yeah, no, it's coming off all right. I think it still has additional upside. I continue to fit. Gold back above 1900 today. I still favor gold for a long-term investment. But I always put out, the thing is like, buy it on a pullback. This is one of those things, and maybe you agree or don't disagree, that you buy on something that you're favoring is going to continue. You buy on weakness versus buy on strength on something like this.
It's a standard bull market theory. In other words, when gold went to 2100, it was in a bull market, but the moving averages are down at 1500. So
Right.
obviously you got to plan on a pullback. Well, you got one down at 1675, and those 1500 moving averages are up in the 1700s now. So you got the moving averages caught up with the price, and that's why you've been able to go back up. But
Right.
and
GLD is a good substitute if you can't buy the gold itself. Right. I mean, we were looking before. I was looking for 1667, and it kind of got dang close. It got to 77, and this one actually got even closer. And so I had marked this as a 3, and it's likely not. So this would be the 3, that would be the 4, and the 5th was a failure, not by much, by about $10, but it failed to put that new low in under this one. No big deal. And I'd labeled that, but I'm going to have to bring that over to here and put the 5 down there. And now it's off to the races again. And this could technically bring this thing. Yeah, because that would complete this larger move. And now we're back, and we're going to start heading back up towards that high.
Where would you put it? It looks to me like a trailer, if you want to keep it on a short leash, would be around 174. Do you have any kind of a number where you'd put a trailer sell on this thing, and just to keep it on a short leash on GLD? On GLD.
Okay. Well, yeah, because right now you've got your 10-day at 175.43. If it starts to break there, it likely is going to go down to 172.
Yeah.
So I think, 174 is a nice area. But you see how these are all pointing higher. That's a daily.
Yeah, that's why you don't want to be selling it. But
higher.
if you want to have something, underneath as a point where if it hits this, it might mean there's cracks in the cement.
Yes, I would say 172.5.
Yeah. So anyway, that's at least something to hang your hat on if you're trying to trail this thing. Because that's sometimes not a bad way, is take a nice 10-day moving average and then let the thing run as far as it's going to run, and try to stay with it as long as possible, but not too long.
Right, because what I do after that, say you're in, you could use that as a stop level, because you could see it's just going to hug all the way up as if the rally continues, and you'll know the rally's over because it's going to come down and break it. But you can use either one of these. This is even a shorter term on a daily. But again, this one doesn't hug it as neatly. You can see it's kind of going up inside of it. So I would use this 10-day. You see the 10-day came down there, touched it, but didn't break it. So, and they all come down and they look like they're going to touch it, but look at how neat they're above it. So I would use a 10-day underneath. If it breaks the 10-day, it's correcting, and it's going to go further.
Or the worst case, you're grabbing some money off the table.
Absolutely.
This next one has the word auto in it. So we all know if it has the word auto in it, it must have been going up lately. But this one's ADSK, ADSK.
Yep.
And it looks like it turned up at around 276, kind of, right? Yeah.
It did. And Autodesk is another local company here, and they're over in Marin County on the other side of the Golden Gate Bridge. But nice correction. That's good. Yeah, this is kind of weird. It's kind of very weird pattern. It's almost trading in what you would call a box. That there, and this box is getting smaller as we continue.
About a $40 box, 300 and 260.
Yeah, there. But then the box got smaller from there to there, and now we're holding and look at that again, hugging and holding the 200-day moving average. That's a very strong positive.
Oh yeah,
for this company, for this stock. So again, you could use the same thing if you're looking that you want to get in. Autodesk will participate in a correction, but how severe, we don't know. But you're going to use your moving averages. See, they're all grouped together right here, and that I'm not particularly fond of that. But you've got your shorter term, and there's the 10-day starting to move up again, pointing higher. But it would just take for it to come back down. So if you're willing to get in long here, because I think we got a lot more upside, then you're going to want to put your stop by these short-term moving averages, so that you're going to participate, and your stop will, and you've got to raise your stop accordingly. So you can't leave it down here while this moving average just moves up, because that's the whole idea of saving the stop, is to protect your profits. So you're going to want.
Well, there's a group of stocks that came way down because people were thinking the interest rates are going up, and so they tried to compress their valuations. This next one, TWLO, is one of them. Snowflake is another, DocuSign, Teladoc, Peloton,
Right.
a lot of the guys. So anyway, this thing looks like it has tried to make a bit of a turn here, coming off the 300 number. Is it just a dead cat bounce? There's some gaps above that need to be filled, maybe, huh?
Yes. Now I'm just taking a look at this. Let me go one more up.
360.
Go one more up to that weekly, and let's take a peek. See, to me, that's a very nice complete correction. And now we're starting again. But we have to leave room that maybe this was just the first leg, and now it's bouncing off of this decline, and it's going to get up to maybe, this 10-day moving average, and then die.
It's above the 50 though?
It is above the 50.
Yeah.
It broke back above the, once it popped back above 300, it got above the 50, and that added a little oomph to it yesterday. So, or no, last week, excuse me. So yes, I'll tell you, if it pulls back and it continues to hold above the 200-day moving average, it's a buy. It's a buy. But right now, you've got the shorter term, the 10-day, the 8-day, and the 20. Well, those two have got to move up above the 20 and then eventually get above the 50. If this thing's really, really going to rally,
right?
You want to see the 50 above the 200, the 20 above the 50, the 10 above the 20. You want to see that even on a daily chart, which is going to give you that confidence that your purchase has now got the support of the moving averages and everything's going up. Without it, you're taking a chance here. So look at here, they're all really grouped together. They're starting on the hourly, 50's now moved back above the 200, and the 20 is above the 50. So yeah, the hourly chart is beginning to show signs of life in terms of the rally can pick up from here. Now, being that they're all within, I think TWLO is also in the Russell, if I'm not mistaken. So if it's in the Russell and the NASDAQ and both of those end up correcting, it's going to go with.
Yeah, they're all on a ledge that IWM is right around that 220 mark. And, it goes down to 215 area and it holds, and it goes up towards 225 and stops. So, I don't know if that's going to be for the foreseeable future, but until that rectifies, either blow out the 225 or blow out the 215, it's any man's guess which way it's going to break,
That's a very, very strong point, and that's a good point. Until the situation rectifies, again, depending on your trade window, are you a swing trader? Are you long? You can make your adjustments to how you want to buy stock based on that.
Yeah.
But if you're a day trader, hey, I'll come in and I'll buy it any day.
Well, that's it. I mean, if you're scalping, that's one thing. But if you're trying to figure out, can I hold on to this thing for 3 months or 6 months?
Right.
You need to have some idea what the direction is.
And right now, it ain't given.
There is none. Right. Okay. This next guy up is called First National. First National Information Services, and it went way up to the 155 neighborhood, pulled back to 145, and now it's back above 150. So is that correction now complete and we're ready to roll, or is this a dead cat bounce and we're going to go take out 145?
Because the hourly chart is showing that this thing closed at 51.93, but yet I'm showing it's traded down to 150.75.
Yeah, that's about what I'm showing it's closed at.
So I'm not sure what this is, other than already it's coming off.
Right.
off of that high, because that was a nice, that's a very
But in
bullish
the
candle.
aftermarket, it looks like it's up. So I don't know if anything happened in the aftermarket, but it looks like it's up.
Oh, then it might, maybe they had earnings today.
Yeah, you see that 51.94 green thing?
Yeah.
That's what I'm showing that it's at in post market.
Oh, okay. So that it closed lower in the regular session, and then aftermarket, it got bounced up. It
Mhm.
obviously had some kind of news.
Yeah,
So they
and then like I
reported a
say,
lot.
it had a correction. You know, it had a $10 correction, and
Yeah.
you know, it's come back up now.
I think, but this could be a finishing move, and then it turns and goes back down again, and then just comes back and down into this area on my hourly chart.
Would you ever measure something like 155 to 145 as being $10, and then about $6 rebound would take you to 151, and then it could roll over from that neighborhood ballpark figure?
Absolutely,
Because
but
it's
I'll
a
tell you, here's one
Fibonacci.
better. Let's run. I'm just going to put extensions in here. If indeed, is this would be it. So that shows you where it's kind of come down, held that 200. Now it's bouncing up. So you could run another Fibonacci right there. I mean, it's going to look a little crowded, but this is kind of how you can figure things out. Right, look at that. It's already back up almost 100%. So it's actually very positive. It tells me that it's likely going to break that, and these are your next levels.
Yeah, it looks like it's got decent momentum.
Yeah, whatever's going on, you're right. Looks like it's got some momentum going here. So we'll see, because that could be.
Yeah, that could be something good.
Yeah.
Let's look at service now, which really seems to a little bit like Twilio. In other words, it's a stock that was really high, came down, and now it's trying to make its turn. And I guess everyone who put these names in is trying to figure out if it's a legitimate turn or if it's a dead cat bounce material. But this thing,
well,
on a 1 and a 6 month basis,
the one before, Fidelity Service, look, has a much stronger case to present for upside than Service.
Yeah, but this is more like
Service
the
now looks like it's
Twilio.
sitting on the ledge.
Yeah, this is more like the Twilio deal where you went into, you got thrown off the building, and is it just bouncing one floor, or is it coming back to the top, you know?
I think it's going down, because look at it, it cannot. It inches above that 200-day, and then it just, let me just blow this up a little bit. Look what it does. Even your 8 and your 4-day are flat as a pancake, flat as a pancake, flat as a pancake. It's not going anywhere. You know, they're not interested in buying it, and the buyers are going like, well, I'm not letting it go down, because they think that it's going to follow what the others are doing, and I don't think so. I think it goes down from here and it breaks back below the 20 and starts heading for the 50 before all is said and done.
Yeah, this is I've got an RSI, 28-day RSI that I'm looking at on a longer term graph, and it's right around 50. So if this thing is any good, obviously 450 should be in the rear view mirror.
Right. I mean, that's a beautiful correction.
Yeah. So, I mean, at least you know exactly where you don't want it to go under. So that's a nice thing.
Yeah, it's true.
And then on a shorter term basis, I'm looking at a 464 number. Would that mean anything to you?
Let me just pull it back down to that hourly. I would not want it down there.
Yeah. So two lines in the sand could be the 464, 465 area, and then 450 if you want to be bullish.
Yes. Yes. If you want to start, yeah, like 448.27 is the current low, and it got down there 3 times over the last couple of weeks. So you definitely don't want it under there to keep a bullish picture alive. And actually, I think, 472.50. I don't want to see it. I don't want to see it start dipping below that 50-day moving average.
Yeah, that would obviously that'd be your first sign that things are going bad.
Yeah, for right now, yes, agreed.
Let's jump over to the Disney company, and we can see that also had a pretty big drop from the 205 neighborhood down to the 165 neighborhood, and then it's bounced back up. One of the things that I heard is they have half the subscribers on Disney Plus that Netflix has, but they only get 1/6 of the revenue, which means their subscribers aren't really padding their pockets very well. But they also got the theme parks opening. So, you know.
Right. And I think that is giving them a little bit of boost, but as so
Mm-hmm.
much as what we see in the markets, too much.
20%
It's
drop.
too-
Yeah.
We ran these Fibonacci's to check out upside. And boy, it went all the way back up. We were looking for upside. And so these would have given us support levels if it was coming off. And then we were looking for a break above that 153. And when it did, ooh, did it fly. And then it just went all the way back up to 1.618 times the length of this. So it has literally blown the doors off to the upside. Now, it's got a lot. This is a weekly chart. So now it's working on, you know, just it's coming off a 1, 2, 3 weeks down action, finally pulling and that's only if it can finish it here. It'll get its first up week, but I think that there's more downside ahead. That's I'm taking this off the weekly. I'm gonna pull it down to the daily. It should technically tell us the same thing. You know, look at this: 1, 2, 3, 4 up days. But you got your shorter terms are rolling. Your 200 will not budge. Wow. This is still lining up to go down, in my estimation. And it's got to hold 165 or all bets are off the table, and it starts coming way back down here. So
Yeah, I mean,
don't know.
sometimes, you know, you want to try to buy against a point, you know, you could buy against that purple line. Or if you are going to be in there for a longer period of time, maybe you forfeit the first bit of money. So at least it can prove that it's got momentum behind it.
Yes, I can see that strategy.
I kind of
Not
like
my
that
cup of
better.
tea, but yeah, everybody's got to do what they think is right for
Yeah.
their portfolio and for what they're trying to do.
Right, exactly.
But this is going to be stiff resistance
Mhm.
because they're pulling lower. And so the market's got to prove. I mean, these are nice rallies, but they've only just taken the short term. The short term moving average is starting to turn up.
Yep.
The 20 is like, nah, maybe. And if you can't get it, it's got to get above the 20 if it's going to have hope. And really, all as it's done right now, look, it gapped on earnings, and it's just going up to fill that gap, which it did today.
Yeah. So if it rolls over from here, that's the end of the story.
For right now.
Short term.
But I just think it needs to put a new low in below that. So I'm still thinking that it's going to hold above the 200-day moving average. So if you want to get in here, this would be your line in the sand.
Mm-hmm. What about Charter CHTR? That thing is been going, and it's still it's down today, but
Wow.
that thing's been going up ever since the drop. Last
These
year.
are Charter Communications. They're the ones that own most of the billboards in town, in the country.
I think they own a whole bunch of media.
Yeah. One of, I think at least out here, they got the corner on the billboards. So yeah, I mean, they've got a good source of revenue and not bad earnings. So if anything, pull back. This looks like, you know, it did a nice leg down and everybody jumped back in thinking that that was all she wrote. And so it's done come back up. And I would say that that's come up maybe about 70% and is now pulling back off again. And I would think that it likely could, again, daily chart. So this is going to look squishy, but I would run a Fibonacci extensions from that high to that low up to that high. Then you're going to get your estimations of where it could come down. And I bet you it's going to line up against this 200-day moving average, or excuse me, 50-day moving average. You definitely don't want to go below your 200 right now because this has provided the floor since April. No, February. It's provided the floor since February. We dipped below it at the end of February, and then they just took it back. Checked it out here, rallied strongly off of it. And they actually did it off the 50. So, you know, obviously this one trades well against its own moving averages.
Yeah, trends.
Yeah, in trend. Yeah.
Mm-hmm.
Absolutely. And right now, the 20 seems to be the cushion on the bottom. Here it dipped below, but look at that green bar, so it closed well above it. And as long as it continues to do that, that's going to keep these guys going, nope, we're going to continue to buy it. So here, 95, and then your line in the sand's the 20. So so if you're buying it here, it is low risk. You know, what you're going
From
to
the
do.
standpoint of the difference between the price and your moving average.
Well, the moving average sitting at 682, yeah, and it closes at 694 or 695. So what, $12, $13?
On this kind of price stock is pretty small
Exactly.
percentage.
Exactly.
Well, we were going to look at MasterCard, but time's running short and it's the same exact chart as Visa. So there's really no need to go over that. It's the same story as Visa. What about Netflix?
Poor Netflix. Netflix, I don't know. It's like a big retail stock as well. I think there's so many people, but now it's over $500. So you're really cutting out a lot. So it's a big option stock. And that's where it gets a lot of play. This to me is a nice, almost complete, look at that gap. It's tried to go back and try to close that gap, not having much success. I doubt it will. I think that we're going to drop, excuse me, come back below the 500 level. And let me just throw something up there, see if I can get.
It's very similar to Twilio. It's very similar to ServiceNow. All those guys all should be in the same library because they're high flying stocks with high valuations that got nailed during the Q1 interest rate spike. And now the interest rate spike seems to have gone away. And now they're getting some boat legs.
Well, if indeed it's going to come down and complete this second leg, which is this one in progress, here's your zone. Here's where I think it goes, 461, 460. And then you got outside, this would be your next zone. So you got your zones of support, that one being the most common, that's being second, and this being third. But the market really has to trash itself, I think, for Netflix to get down below 400.
Oh, I would say so. It would have to change quite a bit. But in the short run here, I'm looking at some moving averages on my stuff at around 490. Would you use 490 as a short-term leash on this thing, or what do you think?
I would, yeah, but I think that's a really tough call. But I also use my moving averages exactly the same way you do. So I would say yes to that. But just protect yourself, because if it gets down to 490 and breaks below and you get out and then only drops another $30, again, a stock the size of this, what's $30 between friends?
Yeah.
I mean, it is and it is, depending on the size of your portfolio and what your position size is. But
this has a steady RSI underneath 50 now, which means that's not the great place to be if you want to be bullish. You want to have that stronger RSI if you're holding on.
And I think you'll get it once it comes down in and hits that target, and then starts to come up again. They start to buy it.
Yeah.
And that's
so you would think this might be better later in the year than it would be in the short run?
Yes, but I think that in terms of, I don't think that that in the indexes, the C wave down that I'm looking for is not going to take a whole long time to get there.
I got
so you. I think that we could be looking at the start of the next rally, in the June to July window. Now, what could really put a fly into that ointment would be we get earnings, second quarter.
Oh, believe me, that's exactly what's going to be moving us as we get into July is how these second quarter earnings, and they're going to be great. So the question is everyone going to go ho hum, or are they going to say, let's get back on the road? Because now people are starting to think about, okay, these are great numbers. Now let's talk about it 2022 and quarter 3 and 4. Because if it dies out and, if we're at peak growth here, and that means all the numbers are going to start shrinking, maybe people would be concerned holding on to stuff at 4,400 or 4,300 or whatever the heck the S&P is,
Yeah.
Because you're going to look where the puck is going, and you're not buying a stock from what just happened. You're trying to buy it from what's going to happen.
Right, and I actually think that that's more in your wheelhouse than mine.
Yeah.
Because you
Well,
deal with,
it'll show up in the technicals if it's correct. You know what I mean? If the
Yeah,
scenario
no, it
is
will.
that we're going to have slower earnings in the quarter 3 and 4, and next year comparisons to this year is going to be very tough, and the stimulus is going to be petering out, and you know, the reality of many people not going back to work could maybe hit us. Who knows? Bottom line is, if it slows down, then it would
Yeah.
show up in then you'd have to blow out for, you know, 4,100, and then you have to blow out 4,000, and then you'd know you're in a correction.
Yeah.
But it wouldn't shock you if you start hearing this kind of news, you know?
No, it really would not. But yeah, I just urge caution. But I liked what you had said, that, you know, the majority of people aren't stepping back into Netflix yet, because they're, you know,
Let's
they are
look
using
at TLT just real quick. We got about a minute. TLT, because that's the interest rate deal. And
Yes.
you know, my thesis on this is, if you can't take out 133, then you're not going to take out the highs on the interest rate market, because 133 was the low. And as you can see, we're nowhere near. We're not. It's like a boat. It's not getting closer to 133.
It's
It's
pulling away
getting
from
further
it.
away.
It's pulling away from it.
You
But
know?
you know what? This thing does not look like it's a market of health. I don't think so.
Oh, there's no doubt. There's there's not a market of health. There's no doubt you're in a uptrending interest rate environment. But could you go sideways here for 4 months?
I think you're already going sideways since
Right.
March.
Mm-hmm.
So we're already 2 months in. So you think maybe we got another month of sideways?
Well, I mean,
Yeah,
you threw
sure.
CPI numbers out, and that didn't work. You threw in the PMI numbers, that didn't work. You threw in the what do you call it? The economic data that's going through the roof. Service PMI at 70. So nothing
Right.
has shaken this thing. And you can see
No.
right now from the graph, it doesn't look like it wants to go to 133 right this second, does it?
No, it does not. And do you think that,
And the whole
I mean, it
world
would have
betting,
to
the
turn and
whole
drop
world is betting
quick.
133. The whole world is betting 133.
That's where it's going?
No, well, how many people do you know says interest rates are going down?
Not many.
Everyone's saying interest rates are going to be going where?
They're going up, but right now we have a Federal Reserve and a Treasury that are saying not yet.
Well, that's right. And the bottom line is positioning is a big part of investing. And if the whole world is short a market and it doesn't want to go down, and this thing goes up to 142, 144, you think you get some people saying, I'm wrong.
Yeah. Noting a point here, it closed above the 50-day moving average.
There you go.
So that's a very positive for continuation. Now, if it zips back below it tomorrow, which
you never know,
it could.
Yeah.
You know, but
the key is listen, the price speaks volumes, and the low is 133.
Amen.
And if it can't take out 133, that means rates are not going higher anytime soon. And right now it's going, if you're in San Francisco, it's not going towards LA, it's going towards Seattle, you know what I mean?
Right. We have one question. I just want to toss it out to you, Jim, because I think this deserves an answer. Anticipating a strong reversal to the downside, have you any inverse 2 times or 3 times ETF to go up as Qs being at 11.16? And would you suggest buying stocks at $11 of a few options further out when the time arrives for the reversal?
Is that for you?
No, it's for you.
Oh, that was a mouthful, and I don't know if I can unpack that thing in a short period of time.
I know, sorry.
But I would say that if you want to email over to optionprofessor@gmail.com and give me a little bit more time to digest that multifaceted question, I think it would do more service to you than me just throwing an off the cuff remark to you. So basically, yeah, there are leverage ETFs, but that's not anything that I go near because of some of the nightmares that can happen with those things. So it's you know, it's not really my cup of tea. So that would be called out of my realm.
Right, and that David was David Wooten put that question out there. So David, just send an email to optionprofessor.com.
Gmail, I'd be more than happy to do it.
Yeah.
And anyway, like I say, not every cup of tea is for everybody. So, you know, that doesn't mean it's bad or good. It just means it's not something that I'm very familiar with.
There you go. I agree.
Okay. How do the people get a hold of you? And then I'll tell them how to get a hold of me, and we'll go on our merry way today.
And then we'll go on our merry way for this afternoon. I can be reached at Michael at mjf1partners.com, or you can check in with me through tradershelpingtraders.com. And I highly recommend, please check in, go to the YouTube sites for Traders Helping Traders, and also logicalsignals.com. And check out my daily video casts on the S&P 500 and the NASDAQ 100. Please go ahead and subscribe to those YouTube channels, and then you will be first on the list to receive all the updates. And also you'll get all the information on the planned reopening of a trade room. That's my latest project, and I'm going to try to get that done by June. If you would ever have an interest, make sure you just get onto my list so that you are fully aware of when that's going to happen.
Perfect. For the optionprofessor.com, we have a weekly newsletter that we put out where we cover our opinions and our observations on the stock market, on the bond market, interest rates, crude oil, gold, silver, platinum, copper, Ethereum, as well as currencies and international investing. So you get a whole mouthful, and it's once a week. And for $49 month to month, you can go to optionprofessor.com and subscribe, and we'll put it in your mailbox. This week, the newsletter is going to be very interesting because between now and Friday, 72 hours, we're going to know a whole lot about what's going on. And I think it's going to be very exciting. So I'm looking forward to putting the newsletter out this week with a lot of information that's very timely. So optionprofessor.com/subscribe, and it's month to month at $49, which is pretty darn cheap. Okay, I'm back. I'm done here. And Michael, thank you very much for being here. I think we gave a lot of information out to people. Hopefully it'll be of value. And
Yes.
and then David, back to you, and we'll be talking to you soon.
All right, thanks guys. We covered a lot of good info today. So just a quick reminder for everyone listening, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, or you can also just go to TimingResearch.com and get access to this show as soon as I can get it posted, or any of the past shows. So I just want to thank my guests again for today. Michael Filighera of TradersHelpingTraders.com and LogicalSignals.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.